The biggest, most influential and well-funded money in the world has not only reclassified gold as Tier 1, but for the past 4 years has gone to great lengths to acquire it, remove counterparty risk, take possession of it, and I don't see it abating. In fact, I see it accentuating. We've already delivered over 200 million ounces of silver off of COMEX this year. That outpaces last year. The gold deliveries last year off of COMEX were greater than the entire gold holdings of the Central Bank of India or the Bank of Japan or the Dutch National Bank. You're seeing a tiptoeing out of the dollars and out of fiat currencies by big money, but at some point that turns into an all-out stampede.
This is Dunnigan Kaiser, founder of Liberty and Finance. I'm now a licensed gold and silver broker for Miles Franklin. Call me directly for the physical gold and silver that you need at the best price with personalized private service from one of the oldest and best companies in the business. For fastest service, just call 1-888-81-LIBERTY. That's 888-81-LIBERTY. And either I or one of my sons and fellow brokers will call you back as soon as we can and understand your needs. Welcome back to Liberty and Finance. We're delighted to have this returning guest. Andy Schectman is the CEO of Miles Franklin Precious Metals Investments. He joins us for this weekly market update this Tuesday, July 20th, 2021. Andy, thanks for coming back on Liberty and Finance.
Thanks for having me, Dunnigan. Always good to be here.
We saw a lot of each other over the past weekend because we were both attending the 2021 Natural Resources Symposium in the Miles Franklin booth. There were a host of speakers and very big name attendees, exhibitors there, and a lot of people attending who are very interested in natural resource investing. And one of the steps of natural resource investing, of course, is physical bullion. And there's also many other ways between mining companies, royalty companies, et cetera, exploration companies. A lot of that was talked about there. If you had one thing to share with our viewers from your presentation on the main stage at the conference, for those who weren't able to attend and take that in, what's something that rises to the top of your mind of kind of the core of your message?
The core of my message has been the same consistent message, Dunnigan, that I have shared now with you for almost 18 months. The core of my message centers around a linear progression of events that has started in 2017 and continues today, a pattern of dollar divestiture or de-dollarization, a pattern of accumulation of precious metals by the biggest money in the world. The central banks to this day continue to amass huge quantities of precious metals. The commercial banks continue to amass huge quantities of precious metals. The deliveries continue to happen in copious amounts off of the COMEX and Exchange for Physical off the London Metal Exchange. You know, one of the things that I have focused on for a very long time is Basel III, and everyone hears about Basel III these days and don't know what to make of it, so much about the reserve ratio requirement. And again, what I focused on is the exact same thing I focused on mostly for the past year and a half, and that is the reclassification of gold as a Tier 1 reserve. The reserve requirements, while nice to me, is noise. It isn't really what I focused on. I focus on the fact that the biggest, most influential and well-funded money in the world has not only reclassified gold as Tier 1, but for the past 4 years has gone to great lengths to acquire it, remove counterparty risk, take possession of it, and I don't see it abating. In fact, I see it accentuating. We've already delivered over 200 million ounces of silver off of COMEX this year. That outpaces last year. The gold deliveries last year off of COMEX were greater than the entire gold holdings of the Central Bank of India or the Bank of Japan or the Dutch National Bank. We're talking massive deliveries off of COMEX. We're talking massive purchases by the central banks. We're talking massive amounts of de-dollarization. And I think that you follow the big money, the rhetoric and the price, like we saw here the last few days, silver smashes and gold smashes that are so counterintuitive. These types of misdirection tactics encompasses so much of what we see every day that it becomes frustrating. And they certainly have become very adept, whoever they are, at making us question our own belief structure. And I think the bottom line is simply this, that you have to tune out the noise. You have to realize we're being misdirected, because for the past 4 years, it has become increasingly clear that the most sophisticated money in the world is doing all they can to accumulate metal at subsidized prices, while the rest of us are licking our wounds wondering, is it ever going to go higher? The big money is smiling as they take as much gold and silver that will still be delivered at these make-believe prices. And really, that's the central theme of everything I've talked about, let alone what I talked about there, just a linear progression of accumulation by the biggest, smartest, and most well-connected money in the world.
Something you just said made me remember a statement Rick Rule had said, if you know that something has intrinsic value and it goes on sale, why would that make you mad? And my wife and I were talking about that too. Is she's a super shopper, I call her. She really looks for sales. She buys the next year's Christmas presents in January and February of the previous year, that kind of thing, and always looking for discounts. So it amazes me when you have something that it's imperishable. I mean, it doesn't perish. There's no loss of the value of it, and it has intrinsic value that never goes away. And so when it's on a markdown, as people say, back up the truck. That's one of the things that I've talked with several clients who've talked to me over the past week. Is they're looking at the stock markets that's looking shaky. They don't know how long that's going to go on. The bond market, we keep hearing real estate's in a bubble, and they're looking at what's in an anti-bubble. And that's what Gregor Mannarino always says about metals, particularly silver, about it being the anti-bubble, the only one. In fact, Michael Pinto talks about the bubble of everything being stocks, bonds, and real estate, never having been in a simultaneous bubble before.
That's true, and they used to be inversely correlated, at least stocks and bonds did. It was titled risk on, risk off, and now they're all positively correlated, inversely correlated to interest rates. But one of the people, you're saying people are concerned. The question shouldn't be how high will gold and silver go. The question is, I think, how bad can it get? And I think that's more important. And I think that the markets are in rarefied air, and to expect them to continue to trade at these levels is foolhardy. And so I think that's why owning gold and silver has never been more important. Look, gold and silver are pure wealth, and they're money that has no counterparty liability, like you said. And history has shown us, Don, again, and I think we're getting closer to it, that all paper money loses its value until it finally becomes worthless. And that's where I think we're coming to that point. We're getting to the end stages of this game. And look, what do they say? Those who don't know history are destined to repeat its mistakes. And I would add to that, those who save in dollars are destined to go broke. And so I think that buying gold and silver right now is not to get wealthy. It is wealth in a period of great uncertainty where the biggest money in the world is front-running those movements. The biggest money in the world is positioning, while the rest of us lament the smash downs. They're orchestrating it so they can acquire it cheaper. The same thing that we're talking about, it's a lot easier maybe when you know the playbook like they do. When you write the playbook, we all have to try to follow along best we can. But I think that this is very important to understand, that these pullbacks, and it's easy for me to say, but they are a subsidy. They truly are. If you realize the biggest money in the world is continuing to accumulate it as the prices go down, it becomes a whole heck of a lot easier for that statement to sink in, I think.
Another point that a client made to me, I spoke with her today. She was a first-time physical silver buyer, and she's been sitting on the sidelines for quite some time, concerned about her 401k, concerned about her any investments that she has, particularly about her retirement potential. And one of the concerns about bank accounts, she says, is she can look at her bank statement and see the balance is looking the same or going up very, very slowly, 0.05% per year, whatever. But she knows in her gut that the purchasing power of that is being drained away, and at an ever-increasing pace with this trillions of U.S. Federal Reserve notes being created every year now. And one of the things she said is, at least if I have my money in silver, as they do whatever they're going to do to the US dollar and the banking system and all that, at least I'll have this number of ounces and nothing's going to change that number of ounces. Is still going to be there for me.
Well, the question is, why do they do that? And again, why do they want to lower the value of the dollar? I mean, I think the Fed wants this. The Fed wants a lower dollar to increase asset prices. And by doing that, that their idea involves injecting money into the bond market in an effort to get asset prices up and keep interest rates low. That's so obvious, because who in their right mind are buying these 10-year treasuries at 1.1, 1.2% where yields have fallen by 60 basis points in a month, to make people really think, well, is that transitory inflation really transitory? Because the bond market's saying it is. But I would submit, who the hell's buying the bonds? I mean, you have to be out of your mind to do it. Look, their logic is that higher asset prices make people feel rich and more inclined to spend money. But if creating prosperity and wealth were as simple as printing money, well, Zimbabwe would have been the wealthiest nation on the earth a long time ago. It doesn't work. But that's what they're trying to do, and it's a tightrope. It's a balancing act. And where I start to wonder what happens is that, for many years, the willingness of the world to accept dollars has been the key to our prosperity in this country. But, think how crazy it is that the world's largest debtor nation, with nothing backing the value but the government's ability to tax and the military is considered the world reserve currency. I really think we are getting to the final stages of this game, and you can see the biggest money rushing to prepare for this by selling dollars and accumulating metal and holding down the paper price to keep us all, looking at our statements and happy that their asset prices are high. And in the end, it's a shell game. So I think, you're seeing a tiptoeing out of the dollars and out of fiat currencies by big money, but at some point that turns into an all-out stampede.
You mentioned before we got started that you've been doing some deep thinking over this weekend following the conference about other reasons that occur to you to justify people considering physical metals ownership. I don't know what those reasons are, but if you wanted to share that with us, that'd be great.
I guess the thing that resonates to me more than anything, Dunnigan, is that I see a massive dollar inflation being the byproduct of a massive dollar devaluation. And I think it's coming. And what it all boils down to, I see a future where my 3 kids will not have a better life than I did, in my opinion, at least in terms of opportunity. I haven't entirely lost my ability to be optimistic, but I think that we are getting to a point where things are going to get bad. And I think inflation is not transitory. I think it's here. Janet Yellen just came out and said, well, we'll probably have it for, through 2022. What the heck does the Fed know? They call it contained, right? Well, that's the exact same thing Bernanke said right before the subprime crisis blew up in his face. It's not contained, and inflation is not going away. And they're blaming it on supply chain disruptions and on high energy prices. They're blaming it in the wrong place. They've created money at a 25% year-over-year increase. That's inflation. It's an increase in the money supply. And it just seems that worldwide sound money be damned. And it seems like the race to devalue one's currency is underway. And I would also argue that the race to accumulate gold is underway. We just don't see it. The big money is going to great lengths to blur that. I see it because that's all I focus on. Is if you look at the amount of central bank acquisitions, even small central banks that are now accumulating massive amounts of gold, that is another way of saying we're selling dollars, we're de-dollarizing. The fact that the Bank of International Settlements reclassified gold, Dunnigan, is the only other tier 1 reserve in the world is all that people need to really understand about this. When you see the amount of effort that is being used to accumulate metal, and the price is not dissuading the big money. In fact, to the contrary, it's incentivizing them. This is the hard part. This is the part about buying low and selling high. It's easy to talk about, it's hard to do. But again, I really do believe that you will see massive inflation as a result of greater dollar devaluation. And they can't reverse this problem, in my opinion, at least not without going through some really, really, really hard times. And gold and silver will go higher in response to a lower dollar and the inflation, which the Fed has little choice but to create. And that's really, I guess, what I see when I look forward. And that's why buying gold and silver to me is a life raft. It's wealth. It's been that way for 5,000 years, and you can see the biggest money in the world is doing the exact same thing.
Yeah, I can't help but think, as an engineer, we always think about what units are you measuring in. You always are concerned about that. And you're also thinking about where the origin is. What frame of reference are you using in the system that you're studying? And as you keep talking about, when you say, rather than saying, oh, gold's going to go up or silver's going to go up, you say it is wealth. So it's the fact that we're all just fixated on measuring things in the currency that's being completely debased before our eyes, that we've got to get our eyes. It's interesting. I can't deny that I'm also interested in the price in dollars of gold and silver on a daily basis or whatever. But in the end, it's the asset itself that is the wealth. It's not this crazy measuring stick that's disappearing in front of your eyes that you're trying to measure it with.
Yeah, well, it's different from all the other recent bull markets, like in stocks and bonds witnessed over the last 20, 30 years, because not only can this gold and silver bull market make you rich, it could, but it can also save you from disaster in your other investments. And that's what's unusual about it, and I guess be careful what you wish for in terms of being rich with your gold and silver holdings. But look, I think it's becoming very obvious that the need to own it in this environment is growing by the day. And, maybe that's why the powers that be, the same dummies that are buying 10-year treasuries, guaranteeing a 4% nearly, if you believe the bogus numbers out of the CPI, guaranteeing 4% loss per year compounding over 10 years. And if you listen to what John Williams is saying, it's more like 10 or 11% per year compounding. The same dummies that are doing that are the same ones that are shorting gold. They're all trying to keep the narrative in place. Yet, as they're doing that, their actions are betraying their rhetoric. Their actions say, no, when you listen to this, and while I scoop all this stuff up, because everyone is so enamored with their sky-high asset prices in terms of their stocks and their bonds and their real estate. It's classic misdirection. And that's what I can't help but continue to think about and really try to explain to people that this is not about, it's not like cryptocurrencies where you wake up and you've made a fortune. It's about you wake up and you didn't lose everything. And I think that's not so far off. I think it's not as far off as people think, based upon the numbers that we see and the actions of the biggest money in the world. And, I don't think inflation is going to get any better for a long time. In fact, I think that the Fed has no choice but to continue to spin their inflation machine. And, maybe, hopefully I'm wrong, but I don't think I am. I truly don't think I am.
In the face of that kind of an environment that's been persisting and accelerating, what can we offer in terms of a weekly special that gives people a chance to get a toehold and do what the wealthy are doing and accumulate physical?
Yeah, so we're going to kind of approach this from two ends of the spectrum. On one end, we're going to offer 1,000-ounce silver bars. And if anyone out there owns ETFs, GLD, SOL, in this case, SLV, or any of the silver funds, ETFs, where, it's important to know that SLV, as an example, has a 40 basis point management fee. PSL, the best of the bunch in paper, I don't know what their management fee is, 30 basis points, maybe 35 basis points. So, you're talking about all of these paper funds have management fees. I would equate that to, if you're going to store things, very, very close to the rate of storage that we can offer clients in our Brinks facilities, in our Dakota Depository facility, very, very close. So the amount is in storage versus management fee is really close. The difference is that I'd like to offer those same people 1,000-ounce bars at $1.69 over the price of silver, either delivered to their door or stored with 90 days free storage in any of our facilities, including all of our Brinks facilities in North America. And, you know, if you're looking to really take a larger position where you maybe don't need the versatility and the flexibility of smaller pieces, hey, this is a great way to do it. This is, in my opinion, kind of an alternative to an ETF where you get the real thing segregated, allocated to your name, and in the most inexpensive way of accumulating it. On the other end of the spectrum, we'll continue with some of the more popular 1-ounce silver coins. In this case, the 2021 Silver Krugerrand at $4.69 over. And, you know, premiums have come down a little bit. I'm happy to see that. This is a time of the year where, you know, especially July 4th, and especially after what we've all been through, where I think people just want to get outside and be with their family and travel and do things. So as a result of a slowdown a little bit, I think we've seen premiums and, of course, a price that hasn't done much have come back a bit. And at $4.69 over, then again, I do believe we're as close or as inexpensive as anyone in the industry on those, and got a good number of them in stock. $4.69 over for any quantity in the 2021 Silver Krugerrand. Kind of both ends of the spectrum here.
Right, because we've talked about for people who are just getting started, they might want to start with smaller denominations so they have flexibility, both averaging in and if they ever wanted to make any transactions out, they wouldn't have to make big ones. But for people who have that start and want to either protect funds that might have been in a 401k or an IRA, or if they want to move over some things from savings, if they're selling a home or a piece of property, or have some retirement set aside, any bonds that they're going to be cashing in because they can't get any good returns on them going forward, CDs that are maturing that they can't renew. I just talked to a gentleman today who's got a pension plan at work. It comes up every 6 or 12 months and it renews, and he says, you know, he just thinks that it's time to get out because otherwise you're in for the count for the next go round, and if the markets drop in the meanwhile or whatever, you can't escape mid-cycle. So he's looking for a safety raft to get onto. So some of those bars could come in just right, just what the doctor ordered for people who have a significant funds that they want to protect out of the system and get out of the casino.
Yeah, and again, look, I just want to hammer it home that this is wealth. This is money. This is money that you know, either you can use it as your wealth and access it when you need it, or put it away and hope you never need to use it. And whether it's an opportunity or emergency, you're darn glad you do have it. Pass it on to your family. But these are times that are really unparalleled anything in history. And I just think it's time to get out of the way of this. Let it all play out. And, you know, I think as we get closer to the end of the year, we'll see more and more interesting things, shall we say, happen. And so getting out of harm's way right now, not a bad idea. Buying gold and silver. I mean, look, you're buying silver at half of its all-time high right now when premiums have come down, when the biggest money in the world has already taken over 200 million ounces off of COMEX, which is outpacing the biggest deliveries ever last year. The big money is telling you that price doesn't matter. They're happy to acquire it at this level because it's wealth in this great upheaval that we find ourselves in. It's a raft of sanity. And I think that's the way people need to look at it, not hoping to get rich, but hoping to get out of the way of what's coming down the highway.
Yeah, that's a point that's also been borne out in conversations with clients recently, as some people have watched certain YouTube blogs or other channels, or they're in chat groups or whatever. They're saying, okay, here's how it's going to play out. This is going to happen, and this is going to happen, and then this is going to happen, and then there's going to be this big reset, and then this is what you do next. And these elaborate, like 5, 6, 7 steps down the road. And I'm saying, really? When I talk to these people, I said, anybody who tells you, if they ask me, how is this going to play out step by step? I said, well, the quickest answer I can give you is I don't know, and the people that I know don't even know the people who know. If somebody does up there know, and that anybody who tells you they know exactly how this is going to play out step by step must not have lived through the last year and a half where the rule books can be changed and all kinds of things curveballs can be thrown at us. So rather than try to outsmart, Gregor Mannarino and others say it's even a fool's game trying to pick exact bottoms or pick exact tops. You just make sure that you are aware of what the major trend is, and you make sure that you're positioned for that to be your friend. And in this case, whatever's coming in terms of the impending risk to our family's financial futures, we may not know the details of the machinations that are going to be pulled out of a hat by national or global or whatever forces, but we do know that you don't want to be fully plugged into the system and be basically sheep to the slaughter in the slaughterhouse at the time that happens. You want to be protecting what's yours and let that change, which you can't foresee exactly and you can't necessarily change, but when it happens, be in a position that your family's going to survive financially.
This is going to sound goofy, but it would be you in the respect that you talk to the brightest minds in the industry on a daily basis. A lot of my preparation throughout the week to stay on top of what's going on will be to listen to your guests. You're inundated with information from really, Gregor Mannarino, I watched some of his videos last night. He's an amazing guy, and he's smart as hell. And Alistair and all the guys and Michael Pinto and all these people on your show are all echoing the same thing, maybe not saying it the exact same way. But I think it's time to listen and hope we're wrong, but I don't think we are. And when you see massively desperate measures being taken, when you see Wells Fargo closing lines of credit, when you see $1 trillion going into the reverse repo market, when you see Zoltan Pozar, I think his name is, the guy, the repo market king, saying we are in big trouble and heading down a very desperate road, when you see John Williams saying we're on the heels of hyperinflation and it's already double digit, and on and on and on, at some point it's going to happen. And much like I've said to you before and we've talked about on this show, everything I have ever talked about at Miles Franklin, for the most part, publicly has come true because it's rooted in mathematics and economics, but never within a grenade shot of when we thought it would. But it always has manifested somehow. I was doing this when gold was $250 and silver was $4. And, all I can tell you is that I think we will look back in a year or two, and I think getting gold and silver, as easy it is right now, I'll say it again, it will define this marketplace. And what is available now and at decent premiums like that changes over and over and over again. And if you see an event where more and more people, which have already woken up, there has been a renaissance. When more people wake up and say, you know what, I dipped my toe in 2020 and 2021, it's time to protect ourselves, overnight things disappear. And I think this is getting close to the end of the ball game, where time to give a little reflection yourselves and think about, where do you want to be if this all happens? Where do you want to be if interest rates rise? Where do you want to be if things start to crater? And, when there's a rush out of the door all at once, it's a problem. If you get out before everyone's running behind you, you're going to have options. And I think that's what I would try to convey to people is be proactive as much as you can. We're already late in the game. But this pullback that we've seen lately, these lower premiums, is giving you a reprieve and a really good entry, in my opinion, to trade some worthless paper dollars that are depreciating by the day, by the minute, into real wealth, into real money.
You just made me remember last year we got the heads up the morning of, in the afternoon, Trump came out and announced the national emergency. And also the same summer where we had all these riots and disruptions, we were exhorting our children to get the water that they needed stored up, get their food supply taken care of, get their medications, what they needed, so they didn't have to be going out and fighting in lines for the paper towels and toilet paper with those others who are scrambling last minute. And now we actually just made a personal purchase this last week to be able to share some things with our kids for Christmas, and to put some metal in their hands and our grandkids, because it's so important, as you mentioned, to plant the seeds and open the eyes of the current generation and next generation so that they have those preparedness before it's too late. Well, Andy, I think we got to keep this short because I promised that we would. And just as always, on behalf of all of our viewers, I, at the front of that group, am grateful for your presence here with us and sharing your personal insights. You know, it's one thing for you to share your insider's insight into the supply chain. It's another thing when you share your personal gut intuitions and insights and responses that have formed over 3 decades and a lifetime of caring about people, of taking care of your family, of all that. That's what we're about here. Just thank you for joining us here again on Liberty and Finance.
The honor is truly mine. I've said it before. Working with you and your family is one of the great joys of my career, and I wouldn't have it any other way. So thanks for having me. We'll see you next week, and stay well.
This is Dunnigan Kaiser, founder of Liberty and Finance. I'm now a licensed gold and silver broker for Miles Franklin. Call me directly for the physical gold and silver that you need at the best price with personalized private service from one of the oldest and best companies in the business. 31 years strong, A+ rated by the Better Business Bureau, 0 complaints, licensed and bonded. For physical delivery, vault storage, or precious metals IRAs, excellent prices, privacy, and confidentiality. Pay by check, money order, ACH, bank wire, or Bitcoin. Satisfaction guaranteed. For fastest service, just call 1-888-81-LIBERTY. That's 888-81-LIBERTY. And either I or one of my sons and fellow brokers will call you back as soon as we can and understand your needs.